But let's get more from New York. We have Chuck Bradford, a partner at Affiliated Research Group. Chuck has over 40 years of experience as a global metals and mining analyst, and he has been named to the All-America Research Team by institutional investors more than a dozen times. And by the way, Chuck has been named Wall Street's #1 steel analyst on 6 separate occasions. Chuck, good to have you with us. What about these results from Alcoa? Some would say surprising the markets, again, topping estimates. What about going forward?
Well, first of all, thank you for having me. I was sort of lucky, if you will, because I had an 8-cent estimate for the quarter, and they came in at 9. But keep in mind, a year ago on the same basis was only 4. So there's quite a bit of improvement compared to a year ago. But the number was down quite a bit from the second quarter because the aluminum price actually weakened. It was down, the market price was down about 5 cents a pound, although Alcoa only got hit by 2 cents. What also hurts them is currency, because aluminum is priced in dollars, but their costs are in Aussie, Canadian loonies, euros, and Brazilian reals. So their costs get hit quite hard when the U.S. dollar is weak, but that makes the metal price go up.
But despite, that's right, but despite all that, Chuck, you know, we have Alcoa raising its 2010 global consumption forecast to 13% on higher demand coming from Brazil, China, and also India, these BRIC countries. So there is some optimism for this company going forward.
Well, frankly, I think they're a little bit too optimistic. For example, in China, our figures on consumption through August were up 15%. Alcoa is showing 21%, but August was actually up only 1%. So, you know, I think you have to be a little bit careful. If you think they're being too optimistic,
then, okay, Chuck, if you think they're being too optimistic, then why do you have a fair value call on the stock at $17 US? That's about $5 from where it is now. So we're seeing upside of close to 50% for this share.
Well, basically what I do is I come up with a cash flow forecast for next year, not this year, next year, and I put a 7 multiple on that cash flow, and that comes out to 17. So as long as the world economy is improving, and I think next year is more critical than this year, I mean, Alcoa is a pretty cheap stock.
Okay, Chuck, what about the global recovery right now? You know, there are some headwinds here. We're looking at quantitative easing, QE2, coming onto the market as well. Do you think if 2011 is a critical year for Alcoa in terms of use and demand, what do you think we'll see here?
Well, I think next year there'll actually be less new supply. That was the problem this year. There are 2 huge new smelters in the Mideast that started up. Chinese output last year was 13 million tons. This year it's going to be close to 17, but I don't think it's going to be up very much next year. So when you combine less supply and let's say assume a decent economy, aluminum should do okay.
Okay. What about the currency fluctuation, though? As you mentioned, currency is playing to Alcoa's bottom line, especially the Australian dollar. In fact, it looks like Alcoa loses $75 million of annual net income just for every 10 cents of the Aussie dollar gains. What about the Australian dollar at these record levels? Is that going to cut in?
Well, the Canadian dollar, too, both of which are near par with the dollar. That will absolutely hit. It hit them in the third quarter as well. But keep in mind, they sell aluminum in U.S. dollars, so that basically hedges, because the price of aluminum goes up when the U.S. dollar is weak. So there's a hedge, because their costs are in the other currencies.
Chuck, it was a pleasure speaking to you. Thank you for the analysis and the insight. I appreciate it. Have yourself a good weekend. That's Chuck Bradford at Affiliated Research Group.